Hello, everyone. This is Sasha Ashegi with Arcanum Ventures. I'm here at the 13th Global Blockchain Congress in Dubai with Mohamed, the head of tokenomics at Animoca Brands. How are you doing, brother?
I'm doing great. Great to be here today, Sasha.
I like this intro. This is solid. Man, we just met a little while ago.
Yep.
We've never met before. I think, we're familiar with a few different projects in the space. I think there are a couple projects that kind of tie us together. But we just had an amazing conversation, not only around tokenomics, but meme coins, scams, everything else in the space. So, and this is coming off of a talk you just gave around meme coins. So let me ask you, do you think there's a lot of good or bad in the meme coin culture here?
Well, you've jumped straight in, haven't you? To be honest, like, crypto is culture, and we think about memes. Memes transcends technology. It's existed before blockchain. It's existing during blockchain. So for me, in general, it's good. Is there nefarious activity that can be done within meme coins? 100%. But you can argue the US dollar is a meme coin within itself, and we all know how nefarious that is. Maybe I'll leave it there.
Well, this is really interesting because I was on a Twitter space recently. I talked to some people, and there's a lot of the use of this term culture coin coming out. People are saying that memes are kind of gone, or there's not, memes are not being created anymore for these coins. And now we're talking about culture coins, which is interesting in the context of what we saw recently in Solana, where there was a lot of kind of like racist coins coming to market. And so it makes you wonder, like, are they culture coins? Are they meme coins? Or are they really just like hype trains that people are hopping into hoping that they can make a quick buck?
I think the short answer is all of the above. Some people will buy in, and because you can be anonymous or anonymous enough online, you might be able to showcase your true feelings or what you've been brainwashed to believe to be true. And another aspect is I want an ROI. I don't care if it's a dog with hat. I don't care if it's a bonk, or I don't care if it's a milady variation or something like that.
Oh, the miladies. I mean, there's so much behind this that we don't see, right? One of the examples I gave you earlier was around the detective work we did with Pepe. But another notable example, which was kind of funny, is Grok. I'm not sure if you're familiar with Grok meme coin, right?
I'm familiar with Grok. Because again, around Elon's AI. Grok token was launched, had the narrative, and
it goes back to like 2020 DeFi summer where like people were launching tokens that had nothing to do with the company. Grok was funny because it had nothing to do with Elon Musk, right? We dove into Grok and we saw that these guys, and we could send a link to the video as well if we're posting this wherever. These guys were systematically launching meme coins named after existing technologies and companies like Boeing, Neuralink, etc. And they had this very, very consistent process. They would create a meme coin supply, they would load it to the LP with 1 ETH, and they'd sit back and hope for the best. Grok was one of maybe 1,000 that they ended up launching. And it's funny because when Grok launched, there was a lot of attention that was brought to this meme coin by Zach XBT, who said it was like a scam from scammers. They immediately burned a bunch of the tokens as like a PR move. But eventually Grok was listed on like all these centralized exchanges. What's your take on like the risks that come from listing these coins on these exchanges without fully understanding like what they are?
So before we jump into that, 1 in 1,000. So your likelihood of success is 0.1% if we're using that as a metric.
You mean you're telling me there's a chance?
There's always a chance in this space. Not financial advice, guys, okay? Do not hold me accountable for that. No, but all jokes aside, again, we talk about users, and users are the main reason why exchanges want to list tokens, be it memes or non-memes. And when you see something go from a 1 ETH liquidity pool and fly, and there's a large number of wallets holding that, and you think, well, how many of these users have interacted with maybe the hot wallets from these wallet addresses? Not many. So we can onboard X amount of new users onto an exchange. Obviously, there's some systematic risk in terms of who's holding the tokens, how many holders there are, what percentage they're holding. But if there's enough liquidity there, even if someone is holding 10% of the token supply, if I transfer 10% of the token supply to Binance, it's a centralized exchange, am I able to liquidate all of that at once? Probably not. If I do, will they allow me to withdraw without going through like the full KYC process? Probably not. So I think there's interesting mechanics there. I don't think it's just around meme coins. So SLP as well for Axie Infinity. Obviously, Axie blew up in 2021, sorry.
Absolutely.
And what we saw with SLP is that it was a fungible token. It was meant as a soft currency. But because of its fungible nature, the community started creating liquidity pools around it. And we saw the growth of those liquidity pools with the rise of Axie. So me as an exchange, I'm not an exchange. But if I were an exchange, I was able to go into the liquidity pools and buy, if it's from Uniswap, wherever that was, and list on exchanges, which is actually super interesting because you're not worried about investors dumping. There were no investors. The community is holding a large amount of these tokens. So all of a sudden, there's less downside risk of one entity owning 5-10% of the tokens being able to dump. So I do think there's upsides. And when we talk about, again, we're both token economists, we're saying that's how it's more like a venture studio or venture building in Web3. There's a strategies there that if I can list on a decentralized exchange, have the right narrative, grow my TVO, grow the volume, that will then lead to larger listings along the line. Versus let's pay hundreds of thousands of dollars to exchanges now to get listed. Let's do a social farming campaign, which helps get us listed. And then there's no trading volume because everyone's dumped the token. No one cares anymore because no one's talking about it. And then it's the end.
This is wild. You made so many really interesting points. And I want to talk a little bit more about this like bi-directional value flow from decentralized exchanges to centralized exchanges. It's really funny you mentioned the idea of like listing these tokens on exchanges. And while you said it, I realized this is such a powerful avenue to onboard users into centralized exchanges for meme coins that are specifically gaining a lot of momentum on Ethereum. And so this is maybe something, it'd be interesting to look at the data about meme coin adoption for centralized exchanges segmented by Ethereum versus Solana, right? Because Solana has like much better access, faster transactions, cheaper fees, etc. But the idea of going backwards is also very interesting. You talked about, let's say, coins or tokens launching on centralized exchanges with IEOs. And then a lot of companies that we've seen recently are kind of like ignoring the DEX thing altogether, right? Which is strange because if you think about what's happening on a DEX is that you're creating an accessibility avenue to like so many users that don't want to operate at all on exchanges, or maybe they're kind of unbanked. They don't have the ability to register a KYC on exchanges. But the weird thing is there's two different models that govern price and demand on these exchanges, right? You've got decentralized exchanges with the amazing innovation of an automated market maker. And then you've got the order book model that exists on a lot of centralized exchanges. And it really brings attention to the question, especially from a tokenomics standpoint, where is the main anchor, right? What's the governing formula or the governing point of determining what the token price is? Because they're really two different supply and demand functions.
When it's super interesting because you have two very different personas or user bases that either, to your point, on centralized exchanges, because there is a level of security there, or I'm unbanked, or I don't want to give up my information because I could be someone who's completely legit. I just don't want to go through a KYC because I actually know the value of my data. So I'm happy to pay the $30, $40, $50 gas fees on DEXs, more so on Ethereum. Obviously in Solana, it's a very different story when it comes to fees. But then we have arbitrage bots or people who arbitrage as well. And it's, if you go for both, you allow new personas to come in and interact. So you have your persona on centralized exchanges, which tend to be traders. You have your persona on decentralized exchanges, which tend to be people either unbanked or genuinely understand the ownership of their data. But if you create that arbitrage opportunity, you're introducing a brand new dynamic into the equation, which is now we're arbitraging between both. And then that helps with the volume. It helps with the liquidity. We're taking volume from here to there and vice versa. So you've got the two main standpoints and then you've got something connecting them both. And something I know, even though we just met, 20, 30 minutes ago, we want to create virtuous cycles. When we talk about economies, there's a virtuous cycle right there. But build it and they'll come doesn't work. There has to be a narrative to allow people to come in on both sides of the marketplace, if you like, to then create the different arbitrage opportunities.
Absolutely. You know, the idea of arbitrage opportunities governing price between the decentralized and centralized side is very important, right? And we've seen the arbitrage gaps on average over the past 2 or 3 years close. Like there are a lot of market makers, there are a lot of different financial players in the space that have become very, very efficient at taking advantage of arbitrage opportunities. But I see so much inherent risk with the lack of transparency and regulation around a lot of exchanges. And there's a very, very huge lack of standardized processes for liquidity provisioning on centralized exchanges. And we all know like how strong of an influence liquidity on exchanges has on the price impact of a particular token. And so what do you see happening in the future with maybe let's say, for example, standardization or transparency, or even just like risk that might be posed by these centralized exchanges acting like cowboys in this space?
I'll speak less on the risk side because we have a legal department and I drive them crazy. So no, if you guys are listening in,
We might be getting him in trouble.
I'm really, really sorry for driving you crazy with some of the crazy ideas we come up with in general. I know it's on a slight tangent, but standardization for me, there's pros and cons, and everything is a spectrum. When it comes to standardization, it then becomes there's no differentiating factor, which might be excellent because I can come in and have the same experience and understand that my liquidity is safe or the market maker is using X, Y, and Z model within all of these different exchanges. So then what differentiates a Binance from a Bybit, from an OKX, from a KuCoin? So we don't want that standardization. You have different user bases, use different exchanges. So like Upbit, very Korea heavy. So if I'm launching a product and I found product market fit in Korea, I'm not going to go launch on Coinbase, for example, because Coinbase doesn't have a large amount of users from the East. It's very much so. It's from the West, Europe and the US. So I think there's aspects where some exchanges represent different demographics. And I'm saying the word demograph in a very vague way. If it's because they have lower levels of KYC, or is it because they're focusing on specific geographical locations? And then as soon as you start adding all of these different variables, you can start to design complex systems around who uses what and why.
Man, that's such an interesting point. I never thought of this really. And it does make sense, I suppose. There might be some minute or even significant differences in, let's say, pricing models on different exchanges. Depending on the exchange, maybe they are tailoring that to their specific user base. And it's crazy when you think about that, because that drives more of an anchor towards the decentralized side, which we know we have transparency on, right? But it's wild thinking that might be there, that might exist, because I assume that a lot of them were operating on the same order book model, but even differences there exist on, let's say, traditional finance brokerages. But I like this concept of standardization. Actually, it's something that I want to talk to you about for a while, because very few people in the tokenomics space talk about standardization. And we mentioned it a little bit earlier before, the idea of creating some sort of standardized template or standardized understanding of how to apply digital asset use cases to a particular economy, for example, in GameFi. What other areas do you foresee happening or standardization coming to be in the world of tokenomics, whether it's smart contract structuring, liquidity provisioning, digital asset use cases, etc.?
I mean, I'm torn on standardization. Part of me really wants it because it makes life a hell of a lot easier when you can come in and be like, right, well, here's half the solution already based on these prerequisites. And then we can understand how we can fine-tune the other half for what you need. But we're still at a point of innovation in the space. I mean, recently we had the 404. It's not a standard yet, but we're getting close to it being a standard, where you can have fungible and non-fungible aspects within a token, which is blowing people's minds.
Yeah.
But for me, it's Web3 and crypto. There is some overlap, but they're two different user bases there. And you now have a way to connect both. You get to, from one end, NFTs now have liquidity. And from another end, fungible tokens can be distinguished. Whereas before, if I'm holding 1,000 Doge and I send you 999, I don't know which one I've kept behind.
Exactly.
But if I can have an image or something associated to that one based on the different models that exist from different types of 404 standards, there's a very interesting concept there to bring together two very different communities and personas under one roof. So do we need standardization? Yes. Do we need it now? I don't know. Probably in some instances you do, maybe for more Web 2 based companies who don't really want the innovation. They just want an out of the box solution that can help them get to market. Which is why I want to go on a very quick tangent. Web 2.5, one of the biggest buzzwords that exists. It doesn't exist, guys.
I know what this means.
Web 2.5 doesn't exist because if you're building a product in Web 2.5, you're aiming it at Web 2 and Web 3. Very different personas, very different use cases. You do not find product market fit. You have to build something in Web 2 and then build something in Web 3. And normally what you're building in Web 3 is a token. And what a lot of projects will say is, oh, you can use my token in-game. Or it can be a medium of exchange. Or it can be this. Gamers don't care about fungible tokens. If I go into a game and I buy 100 gems for $1, tomorrow I still want the value of those 100 gems to be $1. If tomorrow it's worth 10 cents, I'm going to be angry. If it's worth $10, maybe not so much, but you cannot have that volatility for Web2 gamers as of now. But then the Web3 person, the Web3 gamer, doesn't really care about the gameplay. They care about the narrative coming out of the gameplay and how that impacts token price. I was on stage and I was speaking about Hedera. Hedera made an announcement around BlackRock are using them as their tokenization platform for something or another. Token price doubled. Hedera have an amazing tech stack.
I saw that actually.
Amazing tech stack, amazing group of validators from Web2. But I'm not throwing shade on Hedera. Hedera, I love you guys. I love the tech that you guys are building. I'm actually a big fan of what you're doing. But it's all about the narrative.
Yeah. Where's the tether?
Exactly. The narrative was there back 2x in price overnight for actually a token that's listed on Binance. And I think with decent liquidity. Don't quote me on that.
That's wild. That means that the liquidity essentially, well, not doubled, but we don't know the equation that they're using. But what an amazing amount of demand just by that name, BlackRock, coming to market, right? And it just goes to show that this space is still so speculative. People don't understand what they're buying, right? I mean, stocks are quite simple, right? A securities, you own a portion of this company or dividends, etc. But here it's like, well, there's a whole new asset class. I like this discussion a lot about standardization. I think you made a really interesting point that maybe I didn't think so much on or unpackage enough. The idea that standardization can solve so many problems, but it will, guaranteed, to hinder innovation. And we're seeing so much innovation still in the world of tokenomics. And so I wanted to touch a little bit about this concept of Web 2.5 that you talked about, and it seemed like it's a passionate thing for you. I think it's really important because there are aspects within token economies that we've developed, especially for GameFi or Web3 gaming, where some level of centralization maintained is very important, right? Users that are traditional gamers that you might want to bring into the world of Web3 gaming or into, digital asset economies, maybe they don't care so much about digital assets. Maybe they don't care about MetaMask. Maybe they don't want to deal with any of that. And so a level of centralization must be maintained to have these kind of like frictionless infrastructure, right? Especially in some token use cases. In one example that we created for a project, the concept of proof of contribution and collateralized reputation. So essentially, let's say you have an ecosystem where users are contributing in some way within the context of the community, or they're performing well. You can measure their skill and experience in competitive gameplay, and you reward them accordingly. And so all of a sudden, you create an avenue for player journey or player progression, right? In the long term, that demonstrates emotional investment. That demonstrates an investment in your game, and that demonstrates that they've proven to reinvest earnings back into the game, so they're good players to have around. Being able to grant them digital asset use cases in that concept, but centralizing a good portion of it, because this can't be all off-chain. Trying to measure this stuff is a mess, right? What are some thoughts or examples maybe that you've used that incorporate aspects of centralization and decentralization?
So I'm going to go on a slight tangent because you mentioned reputation, and especially in governance, we use token-weighted voting. But one of the biggest challenges of token-weighted voting is if you have whales in the ecosystem, they dominate the outcome, and it turns into a popularity contest, which normally isn't. Well, you can argue is it the right or wrong outcome. You don't know because you have to measure it against milestones, and time has to elapse. But having that reputation layer then allows you to have a leaderboard. And what we know with gamers love to win. If I'm on top or I'm getting close to the top and I'm winning something of financial value, that's more important to me. This leaderboard, me being in the top 10, me being in the top 3, me winning that prize, I'm going to reinvest a big chunk of that to aid and enable me to win. So I think there's a very important reputation. And we're seeing obviously ENS, you can argue, isn't a reputation. It made it easier for us to transact with each other. But all of these and we have like Mocha, for example. So Mochaverse, the flagship project within Animoca brands, public sale going live today on CoinList. Little shill there. I do apologize. I don't really apologize.
No.
But yeah.
Shill it shamelessly, please.
But we have the Mocha ID. And the purpose of the Mocha ID, so you can accrue reputation based on how you've interacted within the ecosystem. We have .edu, so we have an education protocol. And maybe something I know I haven't told you is I was a high school teacher for 10 years in the UK, teaching mathematics.
Good job, man.
So for me, education is something that is very dear to my heart. But one of the problems there is once you leave school, if it's at school, college, university, we really stop measuring university. Stop measuring your learning.
Yeah.
And how do you credential that? So that's where a reputation layer is super important. But then coming to centralized versus decentralized, I'm all for decentralization. But without that reputation layer, it's very hard to be decentralized. If there's 3 of us here, and you understand tokenomics, I understand tokenomics, and there's a third person who's a lawyer. If we have an equal weighting of votes and it's a tokenomics question, we outweigh them 2-1. But if it's a legal question, we also outweigh the lawyer 2-1. So we might make the wrong decision because we have more votes, or because we have more votes collectively than what the lawyer or the legal person would. For me, that's why I need that certain layer of centralization to make sure that those who have the reputation or have the knowledge on specific or whatever that idea is that's being voted on or decision making is the right decision. And as you build up reputation, you can progressively decentralize. And I try to use minimal buzzwords in that as well.
Man, no, it's such a fantastic point, honestly. There's a lot of things that are broken with decentralized governance systems. We talk about DAOs quite a bit. I think we've actually created concepts for a few DAOs that have come to market. This is still very much an innovating space. And the idea of DAOs and decentralized governance is like a concept that's fantastic, but very many ways in which this can break. So there's a lot happening. I want to, go ahead.
Yeah, I was going to say, absolutely. I'm just excited for us to start like collaborating and mingling and just like sharing ideas. But I think everything happens for a reason.
I've got so much to talk to you about, but I think we've got to wrap it up. Yeah. I do want to end with one question though. And it was something that we kind of started our conversation with. The idea of a token economist ending up, funny enough, as a startup ninja. There are so many different business focus areas that we need to pay attention to when designing a token economy. It's not just the idea of creating a pie chart and a digital asset supply. It ties into virtually every aspect of an existing business. It ties into marketing, business development, finances. It ties into the community building and aspects there. It also ties into the legal side. And so what is some of your favorite sort of like speed bumps, challenges, or hurdles in focus areas that you did not expect to encounter in this tokenomics journey?
That's easy. It's founders. It has nothing to do with the tokenomics itself. It's the founders. Because to your point, a lot of people think token economics is a pie chart and a distribution schedule. The way I've got 2 young kids, so the way I explain it is a line from Shrek. An ogre is like an onion. He has many different layers. Tokenomics is an onion. There are so many different layers to that, where that is one of the layers. You have governance in there as a layer. You have your strategy in there. You have your growth. You have your decentralization. You have, is it 1 token versus 2 tokens? Is it fixed supply versus limited supply? You have, are we going centralized approach versus decentralized approach? And it's just like, you can keep adding more and more and more and more. And we keep finding out a lot of unknowns as things progress. So tokenomics or token economics touches everything that you do. So for founders listening in, it is not just a pie chart and a distribution schedule. It has to touch your business model in Web 2, in Web 3, your community, your narrative. And again, a lot of this stuff has nothing. We haven't even said sinks and faucets yet. So you get the idea. Thank you very much.
It's been so amazing speaking with you and meeting
Likewise.
you. I think we just met like 30 minutes ago. But this is what Global Blockchain Conference is all about. This is what this crypto world is all about. It's the most equitable landscape that I've ever come across. It's a merit-based economy. You meet people, you connect over, let's say, common wins or losses, challenges that you encounter, and you become very close as a result.
Guys, thank you for the time.
Thank you for the time.
Remember, Agora, check it out.